when is the right time to sell a share or a counter? I know I've been preaching the gospel of buy from strong fundamental companies and hold them for a long time. But smart investing or smart investors, they don't hold shares blindly. It's about holding good businesses for as long as they remain good investment. So, when is the right time to sell a share? One, when the fundamentals of the companies that you have invested in, they start deteriorating. And this is one of the strongest reasons why you need to sell a share. Companies' fundamentals simply mean how the business is performing and some of the warning signs that you look for, especially when they report their financial results are profits. Are the profits falling for several years? The other thing is revenue. Is the revenue or sales? Revenue, in other words, is sales. Is it slowing or shrinking, especially from its core businesses? Then the third thing you look for are dividends being cut or becoming unstable. The fourth thing that you look for in those fundamentals is debt. Is debt increasing while profits are becoming weak or revenues are becoming weak? Because a good debt, even when you take a loan or a debt, you expand and maybe you get more sales. A good debt should be a debt that is resulting to increase in sales and also increase in profit. The fifth thing that you need to look for in those fundamentals is the management. Are there management struggles? Are management keep on giving promises, but results are not improving? So if the business is getting weaker, your investment is also getting weaker. And this is the time to look for an exit strategy. Currently, there is a company that you are watching, Kenya Re. Last year, they reported declining revenue, and that's why even their dividend, they cut their dividend from 0.35 to 0.15. So if they continue reporting decline in revenues and in profit and in dividend, it's high time you start looking for an exit strategy. The other reason why you sell a share, even though I've been singing that gospel of buy and hold long term, it's when you find a better opportunity. Sometimes you may hold a decent stock, but another company or another stock offers faster growth, stronger profits, maybe a better long-term outlook. In this case, you can sell the one which is have a lesser growth and you move your money to where it's growing more. Then the third reason why you sell a share, when a share becomes too expensive or it becomes overvalued. If a company price rises too much, maybe it's valued at 100 and it goes to 500. A simple question that you need to ask yourself, if I did own this stock today, would I still buy it at this price? If no, then that stock is overpriced and maybe you need to take some profit, and that profit you can invest in other companies which are growing. The other thing that you need to sell a share is when the dividend, that one I've discussed about the dividend patterns, they change. Most of us long-term investors, we invest for dividend. But be careful when the company start cutting dividend. I've given an example of Kenya Re from 0.35 the other year to 0.15. Or they stop paying dividend consistently. That is a warning sign and you need to start looking for an exit strategy. And ask some people, back in September 2006, KQ used to trade at around 570. Currently, you can see at how much it's trading. If people never exited when their fundamentals deteriorated, they are in big losses. In conclusion, investing is not about holding a stock forever. It's about making simple, smart decisions on how the business is doing. If the company is still strong, you can continue holding it. But if things change, it's okay to sell and move your money somewhere else. Good investors don't just know when to buy. They also know when it no longer makes sense to keep holding. Become a smart investor. Thank you.